What if I told you that every millionaire you admire started exactly where you are, knowing nothing about the stock market? And what if I also told you that the real risk isn't losing money, but never trying? Benjamin Franklin once said, "An investment in knowledge pays the best interest." Well, this video is your first investment. By the end of this video, you'll not only understand the stock market but have the confidence to take your first steps. Let's dive in. Every successful journey starts with a reason. Why do you want to invest? Financial freedom? Retiring early? Creating generational wealth? Here's some perspective. Warren Buffett, one of the world's greatest investors, once said, "Someone's sitting in the shade today because someone planted a tree a long time ago." Your investments today are those trees for your future. Now, I get it. The idea of investing can feel overwhelming. But here's the truth, the stock market isn't reserved for billionaires or finance wizards. It's a tool, a powerful one, that's available to you. Unless, of course, you're waiting for a winning lottery ticket. In that case, good luck. For everyone else, let's focus on strategies that actually work. Okay, let's break this down. The stock market is like a giant farmer's market. Companies are vendors selling shares, and you're the buyer. These shares represent ownership, a piece of the business. But here's the twist, instead of picking fruits and veggies, you're picking growth, stability, and opportunity. Here are some essentials you need to know. Stocks, individual companies like Apple or Tesla. ETFs, baskets of stocks grouped together. Dividends, companies paying you for holding their shares. Remember, Peter Lynch, a legendary investor, once said, "Know what you own and know why you own it." Don't just buy because you heard it on TikTok. But wait, how do you decide what to buy? Let's dive into strategies. There are two main strategies in the investing world: active investing, you research, analyze, and pick individual stocks. High risk, high reward. Passive investing, you invest in ETFs or index funds that mirror the market. Less stress, solid returns. Here's the kicker, most people, especially beginners, benefit from passive investing. Why? It's cost-effective, requires less time, and often outperforms most active investors in the long run. As John Bogle, the founder of Vanguard, famously said, "Don't look for the needle in the haystack. Just buy the haystack." And by the way, unless you have a crystal ball, don't try to time the market. Even the pros get it wrong half the time. Now, let's talk about the single greatest wealth-building force, compounding. Albert Einstein called it the eighth wonder of the world. Here's why. Imagine you invest $1,000 at a 10% annual return. In year one, you make $100. By year two, that $100 also starts earning interest. Over 30 years, your $1,000 turns into over $17,000 without you lifting a finger. The key? Start early and stay consistent. But what about the fear of losing money? Let's tackle that next. The market will test you. Prices will go up. They'll crash. And your emotions will scream, "Sell." But here's the truth, panic is the enemy of profit. Take the 2008 financial crisis. The market dropped nearly 40%. Many panicked and sold. But those who held on and even invested more saw their portfolios double or triple in the following years. As Charlie Munger wisely said, the big money is not in the buying and the selling, but in the waiting. So, the next time you feel like selling everything, ask yourself, what would Munger do? Probably pour a cup of tea and hold tight. Now, let's build your portfolio. Here's a simple formula: 60% in ETFs, instant diversification. Think S&P 500 or NASDAQ ETFs. 30% in blue-chip stocks, reliable giants like Microsoft or Coca-Cola. 10% in growth stocks, riskier bets like startups or tech innovators. And here's a golden rule: never invest money you can't afford to lose. Investing is a long-term game, not a get-rich-quick scheme. Here's your homework: open a brokerage account. Try platforms like Robinhood, Fidelity, or Charles Schwab. Start small, $100, $500, whatever you can afford. Commit to consistent investing. Automate monthly contributions if possible. Remember, as Tony Robbins said, the secret to wealth is simple: find a way to do more for others than anyone else does. Become more valuable. Investing helps you grow your value. And no, day trading doesn't count as a value-adding activity. It's a value-draining one for most people. Let me leave you with this: the best time to start investing was yesterday. The second best time is today. So here's my challenge: take the first step right now. Watch this video again if you need to. Write down your goals. And most importantly, start. Like Zig Ziglar said, you don't have to be great to start, but you have to start to be great. Like this video? Hit that thumbs up, subscribe, and share it with someone who's ready to take control of their future. Comment below, what's your first step today? Let's make this journey together. Remember, every great investor started as a beginner. See you in the next video.